One of the big shocks of the young year 2025 has been the decline in uranium prices and especially in the uranium stocks. It's been brutal, but every crisis offers opportunity. For clever investors, there are really interesting possibilities setting up here while everybody is running for the exits. The smart investors are looking for their chances. Here are the 3 steps to take now in the uranium market. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks and months. Uranium prices, as you can see here with the Sprott Physical Uranium ETF and the uranium stocks, are getting hammered in the first weeks of 2025. It's not a crash yet, but we're getting close, and no doubt it's brutal. I already talked about the 4 reasons for the decline of the uranium prices and uranium stocks in the video from last Friday. I recommend you watch the video from last Friday. As our videos, it's only 10 minutes long. It gives you the 4 points you need to know. Link in the info box. Man, I feel the pain of every uranium investor. You know, I'm a uranium bull. I'm a uranium investor myself. This has not been great. We made a lot of money in the gold market and with the gold miners, but uranium, tough. However, there are 2 things you can do now. You can stick your head in the sand, you can roll up in a fetal position and cry, or you can see the opportunity in the current crisis. And that's what I like to do. That is what the smart money on Wall Street does. Remember Warren Buffett. Be greedy when everybody is fearful, which we have right now in the uranium market, and be fearful when everybody is greedy. Now, for that to work, we need to look if the investment thesis of uranium has changed. And the answer is it has not. We have a dramatically increasing supply deficit that will not change. It will only increase with the build out of data centers in the US. Now, you have DeepSeek, right? You have the DeepSeek shock, and I didn't talk about the DeepSeek shock in the last video on Friday as one of the reasons for the decline in uranium prices, and the reason being is that for the market, it's very clear by now that DeepSeek will have an effect, but it's not as dramatic as people think. And the proof of this is the Nvidia price. Look at the Nvidia price. This year, that's the DeepSeek shock, if you remember. And look at this. Nvidia almost recovered all of the losses. That wouldn't be the case if there was a real DeepSeek revolution happening, meaning that Nvidia's more expensive and more energy demanding chips would be out of favor. So by seeing this and seeing the development of Nvidia, this is the proof in the market that DeepSeek is not the story when it comes to uranium and uranium stocks. Now, we have the nuclear arms talks that Trump wants to initiate. That has certainly put a scare in the uranium market. But here's the truth. I am in Europe, and I talk to Americans every day, and I can tell you, Americans do not understand the situation that Europe is in, that Ukraine is in, what's building up with Russia. Putin has zero, and I mean zero, interest in reducing his military capabilities, especially his nuclear military capabilities, which are the only thing that is worrying the West right now. If you do your due diligence on Putin and his worldviews, you will know that Putin hates the West. He's using Trump right now for his own gains, and those gains are he needs a victory in whatever form in Ukraine, and he needs time to rebuild his military. And the emphasis here is on the word rebuild, not reduce, rebuild. Now, maybe he'll sign up to reduce some small amount of nuclear weapons in order to get sanctions lifted, in order to get technology into the country that he needs to modernize the army. But there will be no meaningful reduction in nuclear arms coming. Highly unrealistic. Now, then we have the natural gas substitution for the data centers for uranium. Will this happen short term? Yes, of course it will. Reason, we have such a shortage in uranium and nuclear energy capacity right now. And big tech needs the data centers up and running as fast as possible. But long term, it's not a substitute because it does not stand in line with the zero emission goals of big tech. So those are the facts. So we have no news at all that any country that has announced that they are increasing their nuclear capacities in the coming decade is reducing their build out of nuclear energy. So on the demand side, nothing has changed. Remember, the data centers is just a bonus. It's a great bonus, but it's just a bonus. In order for the nuclear story, the uranium story to play out, we just need the regular demand. The supply is so stripped already, especially for Western uranium. And that will not change, even if there is peace in Ukraine, even if the US and Russia start talking again, even if the sanctions are lifted. Uranium, critical commodity, right, of national security. So the thesis that Western uranium, especially from North America, preferably the US, but Canada is also okay, or Australia, will become one of the most valuable commodities in the new commodity supercycle, absolutely intact. Now, let's look at the charts. This is the URA. The URA is the ETF for the uranium miners. And if I zoom out, right, you know the old saying in the stock market and in the charts, when in doubt, zoom out. Well, I zoom out. What do I see? I see the long-term uptrend in uranium is intact. And this makes absolute sense based on what I just told you on the fundamental facts. Nothing has changed. What are we seeing if we look at this ultra long term? We see the ultra long term uptrend, and we see if we move this out, you can see it already, right? We are going into a top of a triangle formation, an extending triangle. Now this will take a while to play out, but it's coming. And probability says it's going to resolve itself to the upside. And then we will get a major move in the uranium market. Why is that? Well, we have the old wisdom, right? The longer the base, the higher in space. Well, this base then will have lasted about 4 or 5 years. That means it'll be a major breakout. If we go to the upside, the stocks, uranium stocks, will go higher significantly. All right. So let's look at Sprott ETF. Same thing. Long-term uptrend since 2020 for uranium prices is intact. We're running into the top of a triangle formation. You can see it here. And we see by early fall, we reach the very top of this triangle formation, and then we will see a decision in the uranium prices coming either to the upside or to the downside. And based on the length, right, of the trends, we have to favor the uptrend right now. And if that happens and uranium prices start breaking out to the upside, then they will take the stocks with them. We also see in the charts, if we look at the RSI, we are in oversold territory. We are in oversold territory. So that is an interesting area when we reach the support zones. And as you can see in the Sprott Physical Uranium Trust, we are not far from it anymore. We're basically talking about 5% to the downside, even less. In combination with the oversold, the RSI is below 30. It's around like 2650 right now. That is really low, right? So if we get this combination, that is a great opportunity to start buying. So this will be the first step. You pick your favorite uranium investment, your favorite uranium stocks. You do your homework as far as the charts is concerned. If you do stocks, as far as the fundamentals of the companies are concerned. I, for example, like uranium stocks that produce uranium already in the US or in Canada. Australia is also okay, but US and Canada are my number one and number two choices, or that are near production. So 3 stocks that I really like. Uranium Energy. Why do I like Uranium Energy? They're ramping up production in the US already. Great. Great management team that also is very well connected to Wall Street, and they really know how to tell their story and get investor interest. Great. Massively oversold, as you can see now. RSI below 30, around 28.30 right now. We're hitting the first support zone. We might hit the second one. Long-term uptrend, right, since 2020, still intact. Not a problem here at all. This is what we want. So overall trend to the upside is intact. We are using opportunities to get in. Next Gen Energy, favorite of the retail investors, just like UEC. And that's what we want, because that is where the money is going to flow first when momentum is turning. Look at this. We are close to reaching the long-term uptrend since 2020. This is a fantastic buying opportunity. If you don't want to get all in, which I think is the right way to do, buy half now, keep the second half of your investment that you want to invest in uranium, keep it on the sideline. We never know what's going to happen. But I like Next Gen Energy, who, by the way, not as oversold as, for example, UEC is. RSI is at 32.60, not below 30 yet. But if we get it in areas around 530-ish, 535, I'm a buyer. Energy Fuels, you already know it. I'm a big fan. I love that they have uranium production in the US and also rare earth. I showed you this chart before. We are in the horizontal support zone. What I do not like, obviously, is the breakdown below the uptrend compared to the other two. Here you see the difference in the charts, right? UEC and NextGen look better, no doubt about it. But I do like the fundamentals in Energy Fuels. I expect this downturn to end in the midpoint, like it did here, right? Which means prices around 430 to 435, that is a great entry for a first position. And at worst, we are betting on a swing trade bounce back up to retest the uptrend like we did here, where we went down, retested it, went down, retested it. So we can expect this go down, retest it. Then we could put the stop right here on our entry, and then we sit pretty and have zero risk on the downside. Well, zero risk, but very, very minimal risk. You never have zero risk in the markets, to be honest, but very minimal risk that anything will happen. And we can see if we retake the uptrend and see what happens. So that's the second step. You start buying half at the important technical support level. The third step is, well, now we have to be patient. We have to wait. The momentum in the uranium sector, it is cold. There's no doubt about it. Uranium, with very few exceptions like Chemico, is a retail sector. It's where retail investors move the markets. And the retail investors usually come in when something is hot. So when is uranium going to be hot? It's going to be hot when the uranium price breaks to the upside. I already showed you that in the beginning. That's what needs to happen. This is what we will get the decision this year. You saw the chart of the Sprott Physical Uranium Trust. It's coming early fall at the latest. So it'll take a minute for the turnaround to come back. We need to be patient, but that is always the price we pay for great entry prices. So see the opportunity in the crisis. Don't act like the majority of the investors who, as you can see right now, are panicking and are selling because uranium is cold, and they don't inform themselves what is really going on with the fundamentals. They just see the Trump tweets and freak out. And we all know a couple of positive Trump tweets about nuclear energy, and all of a sudden all of these investors will storm back into the uranium sector. The negative news is out. There's not much more negative that can really come out, at least that I can think of. So that's all baked in the market. Right now, the stocks are dragged down by negative momentum. The same way we'll get positive momentum after the turnaround. That's it for today. Talk to you later. Bye-bye.